Oscar Health ran up as much as 7% today during the trading session. Why did they run up 7% today, Ronnie? Well, simply put, Oscar Health got invited on Wells Fargo Healthcare Conference. Today, Blackley went on there and actually talked to them and talked about Oscar Health, the business, where they're going from here. And while he was talking, the stock just kept climbing and climbing and climbing. And in this video, we're going to go over exactly what was said in that interview to understand if you're an Oscar shareholder or want to be an Oscar shareholder, what is the meat and potatoes of that interview and what do you need to know about it? So let's get into it. So here we have the 8K that was filed right before he went on the interview. It was actually, this morning, but whatever. He filed this before the interview. Oscar Health Incorporated, the company, will participate in the 2025 Wells Fargo Healthcare Conference on September 3rd, 2025. At the conference, the company will reaffirm the updated full year 2025 guidance that is provided in its preliminary financial results press release for the second quarter of 2025, dated July 22nd, 2025. So, first and foremost, he went on there and they are reassuring the 12 to 12.2 billion dollars in revenue for 2025, which puts them at 30 to 34% revenue growth year over year this 2025. Next, what we saw in the interview.
Good morning, everyone.
The interview is right here. It's about 35 minutes long. If you want to go to the investor relations page on Oscar Health, you can go there and you can watch it. Or I went live this morning. I went live about 3-4 hours ago, and you can watch it here live with me, Oscar Health live at Wells Fargo. I will link this video in the bio below. 123 people have viewed it already, and on X, a couple thousand people viewed it live with me while we were streaming it. Some things that I wanted to break down for you all. If we move on over here to X, at the RonnieV Show. If you're not following me there, go give me a follow. If you're not subscribed here on X, or if you haven't hit that like button yet, do me a favor, go ahead and smash those two and hit the notifications bell while you're at it so you never miss any information on Oscar or any of the other gems that we're dropping or any other top 5, top 10 stocks that we talk about, or any of my due diligence or my free weekly live streams where I talk about technicals or I talk about fundamentals, and I try to really teach and engage with you all consistently on a daily or weekly basis. So, Oscar CFO Scott Blackley just said there is a strong momentum around subsidies getting extended. If enhanced subsidies were to get extended, it would most likely be the budget resolution. We are optimistic something gets done with an extension to subsidies. And that's just 3 quotes that I pulled during my time listening to that from what I recalled. He said much more about ACA subsidies. He said actually a lot more about ACA subsidies, and it kept on being repeated. I would say upwards of 10 to 12 times it was talked about with the ACA subsidies, and how I want to caveat this though. He said they are prepared for ACA subsidies to not be extended. They are prepared for 2025. They are ready to get back to EPS positive, and they're ready to continue with their free cash flow, and they have a good balance sheet and cash position for any kind of headwinds coming their way. And they are prepared for 2026 and 2027. They're prepared for both of those with their cash positions and with their guidance they've already given without ACA subsidies. This is very important. They are prepared and moving forward thinking that ACA subsidies will not be extended. But in this interview, multiple times, about 10 to 12 times, I only pulled 3 of the main quotes, about 10 to 12 times, he said that there is momentum building around ACA subsidies getting extended. He believes that they were to get extended, it would be in the budget resolution bill towards the end of this year. He also said that they believe there is a high likelihood, based on who they've been talking to, based on the information they have, that it will get extended. And then we talk about the things that we've already been talking about on this channel, already been talking about on X, as we are mega, mega Oscar bulls. Things we've been talking about. One, ACA subsidies treat and are used by 66% of Republicans. So out of the ACA subsidies pool, 66% of them are Republicans. And we have the midterm elections coming up here shortly. And with that, if ACA subsidies are not extended, the main pool being Republicans, 66%, are going to get hurt very, very badly. Premiums are going to spike across the board. A lot of these people are going to lose healthcare insurance or just opt out of having healthcare insurance, which is terrible. Because then, if anything happens to you, then you're footing the whole bill instead of partially the bill or a down pay or a you know what I mean. So if that happens, it'd be very, very bad. And what are you going to have? You're going to have a lot of Republicans very upset with this administration that they let this happen to them, their families, their money, their livelihoods, their health. People pay taxes. They want to have good health care. They don't want to pay $1,000 extra a month. Think of that, $1,000 extra a month. These premiums could go up possibly. That is just horrible, horrible. If you think between you or me, I can't imagine, just having to pay up. This bill was $1,000. Now it's $2,000 a month I have to pay. That's a big deal for a lot of households, and a lot of normal people that live in America. So you would have a lot of people mad. You'd have a lot of people going to their Congress. You'd have a lot of people complaining, and probably a lot of votes would be lost for these midterm elections. And this administration doesn't want to lose House or Senate seats. But if this doesn't get extended, they probably will lose House or Senate seats because of these ACA subsidies not getting extended. So that is one of the biggest reasons that I do believe that maybe nothing long term right now, but even just a 6-month or 1-year extension of ACA subsidies should get done. And I think that's great for the American people. I think that's great for the average Joe that, doesn't want to see their premiums go up. I don't want to see anybody's premiums go up. That's horrible. Everybody should have health insurance. Everybody should be able to go to the doctor when they need to. It's a God-given right, right? But this is very key to that. And now bringing it back to Oscar, if ACA subsidies are extended, and they've already given guidance for 2026 and 2027 of $14 billion in revenue and upwards of 3 to 5% margins on that revenue, gross margins, you see very quickly that this stock that is around $17 to $18 per share, and they're already massively undervalued, if ACA subsidies get extended even for 6 months or 1 year, Oscar is instantaneously going to benefit in a massive way from that. And now all the growth they already had, or maybe a slowdown, as we'll get into here in a minute, my high five snapshot, a slowdown next year, a deceleration of revenue before spending it back up in 2027, that becomes basically non-existent. And it's very unlikely that that would happen in any circumstance. That revenue from this year, the 30 to 32%, would reaccelerate and continue into 2026 and 2027 and give them more time to expand in ICRA and other ACA markets. You see how massive this is, right? You see how massive Blackley going on and talking about this multiple times is very, very big for this company. And it makes me even more bullish that I was already bullish on the company without ACA subsidies. But it does make me more bullish and believe even more so that we will get ACA subsidies extension. But I wanted to say this again. They do not need ACA subsidies extension to make this all work. Okay. They do not need it. It's a big fat bonus, Christmas bonus at the end of the year. So What else was talked about? Well, they also talked about their new partnership and just bringing this up. The key healthcare policies at stake in Congress government funding fight. Government spending negotiations will be messy, but there are glimmers of hope bipartisan agreement. So this is talking about critical healthcare policies that now that they're coming back to work from their little break ski, they are going to respin up talks on that. And the Democrats are pushing very, very hard for ACA subsidies to get extended. And there are a lot of Republicans that don't want to lose their seat. So they're also on board with approving something. Now, the first thing the Democrats send up is probably going to get knocked down and denied, but then they'll come together, work something out that works for all parties because they're not just going to give the Democrats a win, right? You don't just give a free touchdown to somebody or a free goal to somebody, you know? So come together, figure things out, and then pass something that works for everybody. So they also talked about high V health and Oscar, sort of a new area of employer healthcare. They talked about this new partnership that they had. They talked about how they're partnering with High V Health, which is a grocery chain, grocery store, number one grocery store in the Midwest. This is absolutely massive. So this is partnering with a Goliath grocery store, number one in the Midwest, to go after the ICRA marketplace, partnering with a sorry about that. That was one of our trades doing well. Money, money, money. Um, so that's yeah, sorry. Squirrel. So partnering with them is going to bring a lot of business on the ICRA side of thing to Oscar. And just it's, when you get a grocery store, you get a community involved company, a community involved company that everybody knows that bridges the gap between Oscar and the community. And when they can bridge the gap between Oscar and the community, you're going to get more signups. You're going to get more people coming on over, members, subscribers into the Oscar Health family for their insurance needs, which is absolutely massive. So they expand on this a little bit more, and you can see 270 retail pharmacies, nearly 300 grocery stores, concierge primary and urgent care through its joint ownership of Hy-Vee Healthcare, Exemplar Care. Oscar brings superior insurance experience with technology, solutions, and surprises delight consumers. They also talked a little bit about how with their AI expansion, basically it makes it super simple. You can go on the app, you can type in symptoms, and it'll guide you to what the possibilities are and to get this treatment or that treatment or who we would need you to see, or to get you a right there on the app to get you a referral to who you need to see. I mean, through artificial intelligence, how Oscar's combining that with their insurance platform, it is absolutely massive, and it's really going to bridge that gap and make things easier and make things simpler um, for customers. Honestly, so getting into another thing I wanted to talk about was going to be my high five snapshot. You see, we have this giant log of all these different high five snapshots. We're continuing to add into this Google Doc sheet. Oh, I'm not even sharing it. 1 second, guys. Let's see. There we go. So you see our high five snapshot here. You can see all of the different stocks that we have high five snapshots for. This is just a quick, brief little snapshot of the fundamentals of what the discounted cash flow model intrinsic value is, what the EPS fair value is, and where they stand when it comes to value, growth, health, technicals, and moat. A diamond means it's a high five gem. A high five gem is a sub $10 billion company that I believe has a 5x or more opportunity in the next 2 to 3 years. And I believe they are either disrupting or doing something that is going to be very beneficial for not just them, the company, and their leadership and their employers, but also us, the shareholders. So we right now have about, I think, 7 or 8 different gems out there right now. So if you want access to all this, also my levels that I'll be sharing here in a second, we'll talk about, which is my whole investing framework, our phase 1, phase 2, phase 3. So you never have to, you can take the guesswork out of all of it. You can know when to buy, when to build a position, when to be trimming your position, and when to just hold and sit back and relax and enjoy the ride. All that investing framework, all of that, plus more. We have trading, we have all this other stuff in the High Five Collective. We have a Discord and we have a WAP store. That'll be in the link in the comments below as well. If you are interested in joining, we have affordable tiers all the way down to $30 per month for the investing side of things. And you can look at my reviews. One thing I pride myself on is I'm a very, very hard worker. A lot of community members, they say, how do you do it? And I'm not trying to toot my own horn or anything like that, but a lot of people say that, and I'm like, I don't know. I have a passion for this. I truly love this, and I conversate with all of you, and I truly try to help you in your financial journey. So if that sounds like something you want to give a shot, give a try, then come on in. If not, it's okay. All I ask for you here is like the video, subscribe, and share with somebody that might be an Oscar bull like me. So we have 12 billion this year. Like I said, 12 to 12.2 billion dollars in revenue for 2025. They reaffirmed that guidance today. That's going to be 30 to 34% revenue growth by the end of the year. They're going to be sitting at like about $500 million in free cash flow for 2025. Then we're going to see a dip in 2026 if ACA subsidies are not extended, more than likely down to about 11 to 11.2 billion dollars, and about six 600 million or so free cash flow, then climbing back up to 14 billion, 15 billion, 18.6 billion, and then 20 billion by 2030 in revenue, climbing all the way up to over $1 billion in free cash flow. The discounted cash flow intrinsic value on this name is 60% margin of safety, meaning prices here today, prices here today, and the margin of safety is from here to where the price is actually. So, sorry, I messed that up. Jeez. I think my kids are getting me sick, so my mind's all a little messed up, guys. So, $42 should be the discounted cash flow model fair value, and we're currently at $17 in some sense today. So that is a 60, that is a 60% margin of safety. 60% margin of safety from what the fair value should be and what the current price is today. Meaning if you're buying way down here, 40%, 50%, 60% margin of safety, you're getting a great, great deal on this company, and your risk is very, very low. On an EPS basis, so net income and everything, we're sitting at a 31% margin of safety, still very favorable at $25 fair value. And again, the price is $17 and some change today. Like I said, they're up about what was it? 7%, almost 8% at their highs. We see they're going to have a negative $1.38 of EPS this year. Analysts had them climbing to 50 cents. I think they can go over $1 next year if things bounce back. If ACA subsidies come on, if ACA subsidies get renewed, I believe they can do easily $1.50 plus next year in EPS. And obviously that would set this thing on fire, going from $1.50 to 2 plus, 3 plus, 4 plus, 5 plus, and you get the picture, right? On our value and growth are our largest, 30% revenue growth, and it's super undervalued based on EPS and discounted cash flow. Health is the next biggest out of all these out of this diagram. Just basically they have a good balance sheet. They don't have a ton of debt, so looking good there. Technicals are actually looking a little bit better than when I first made this. And their moat is small because they don't have a moat like UNH or anything like that. They're the small guy. They're the disruptor. They're the one coming in and trying to really disrupt the health insurance industry. If we look at our last thing here, we can see that we have our 3 phases, our phase 1 dip buy box, our phase 2 DCA zone, and our phase 3 trim area. Phase 1 is where we build a 60% position or more in the stock that we want to build out. Phase 2, the DCA zone, is where we build out the rest of the 40% of our position if we hadn't already built it out in the dip buy box. Really, it just depends on how long you stay in the dip buy box. For Oscar here, there's no reason that you shouldn't already have your full position built out. As you see, since the beginning of 2024, we've just been in this range from 11 all the way up to $24 per share. Obviously, you want to be buying at the lowest possible area. So sub 15, sub 16, 17 is really where you want to be buying this name on a consistent basis. But yeah, eventually we are basing out here. We're just consolidating like we've seen in the past, like this big consolidation before we had a big pop from 5 all the way up to 24. I believe we're going to see the same thing here. Big consolidation. This is the time to be buying in the dip. This is phase one. You should be building out your position. There's no reason you should be waiting till DCA zone to build out the rest of your 40%. This should be you should have your 100% position being built out in the dip buy box, and then you're sitting here just enjoying the ride as we continue higher and higher and higher into the 20s, which I think we're going to be breaking into here very shortly. You see today we are up almost 6% on the day, or this week we're up almost 6%. Today we're up 7.15% right here, as you can see. So 7.15% on the day. Absolutely massive day. You see, as soon as they started talking this morning around 9:30 or so, the stock just absolutely started skyrocketing. Or I guess it was around 10 or so. They started talking, but then we skyrocketed from there from 16.85 all the way up almost $1 extra on top of that. So yeah, we're in phase one. Phase two, we're gonna get there eventually, I believe, from 25 all the way up to $42 per share. Still a good buying opportunity. You could still be DCAing into this name, but the biggest thing is we're here now in the dip buy box. This is where I have my positions built out at. And I've been building them out. I've also been getting cash secured puts and getting premium while I'm doing that as well. We teach that in the Discord. Also, all the way up to this trim area. And this trim area is phase three. And this is subject to change. Right now, it's at $42. It can definitely continue to move up as the fundamentals get better and better and better. And as the fundamentals get better and better and better, I'm not going to be trimming until I feel that we are getting into that overvalued territory. And then we're only trimming 10% at a time when we get to those overvalued territories. And we're trimming no more than 50% of our position. We will hold 50% of our position minimal forever, or until our thesis changes on Oscar. That is Oscar Health. That is what you need to know from the Wells Fargo conference that we just had. Again, if you appreciate this content, if you appreciate my takes on Oscar, if you appreciate the bull ride that we've been on and the crazy ride that we've been on, and I give you that calmness for you to be able to hold this stock, even though it is a very volatile stock as we've seen. I really do. I love that. And I'm really happy I'm able to deliver that if that's the case. And yeah, these are just informative videos so I can let everybody know in the Oscar community what's going on with them, and where I think they're going, in my opinion. So I'm really excited. I'm even more excited after this conference today. I think CFO Bleckley did an amazing job with the conference and the interview. And I think where Oscar goes now is we continue to climb up to $20 plus, as long as we don't see any big downturns in the market. I think this is where we continue to climb up to 20 plus, get ACA subsidies, climb up even more from there, and we're up and away from here. I really do believe that. Again, if you like this video, leave a comment below. Let me know what your favorite part was. Let me know if you're a buyer of Oscar. Let me know how much you're holding. Let me know what other videos you want me to make on this channel, guys. I appreciate it. Drop a like, drop a subscribe, hit that notifications bell, and I'll catch you guys in the next one.